It is time for a Hoboken Real Estate Market update. What's up, guys? It's Jeff Bonk here with the HBB Group, and believe it or not, we're almost halfway through the year. We are more than halfway through the spring market, and a lot's going on, a lot's changing. So we have some points, some data sets that we want to make sure that you're aware of if you're looking to buy, sell, rent, or invest in the remainder of this year, or maybe leading into next year. And we have advice for each one of those segments. What should you be doing right now if you're a buyer, a seller, a renter, or a landlord? So let's get into it. Let's get into some of the data, and then we'll get into a little bit of the advice for your particular situation from there. The first thing we want to look at is active listings. Active listings are creeping up just a little bit. Nothing massive. We see about 100 active listings on the market today. We were as low as about 80, 90 listings, and usually normal market's around 200. But there's really something that we want to look a little bit deeper at active listings. The average days on market for things that are active right now is 60 days. Yes, 60 days. The active days on market for the properties that went under contract the last 3 months average 10 days. So there's really this two different markets. There's things that are coming on the market and leaving, coming on the market and leaving. And then there's a chunk of listings that are just sitting on the market. Now, some of them might be overpriced, might need a lot of work, might have a tenant in there that won't leave. There might be some issues, but there might be some that just need a little bit of work. Maybe they're a little overpriced and you can make an offer under asking if they've been sitting for 30, 60, 90 days on the market. So it's really important to not just look at the fresh new listings that come on the market right now. You really want to take a look at some of the older stuff that was sitting, maybe some of the stuff that was withdrawn from the market, expired from the market. Your agent could be pulling that data, calling those old listing agents or sellers and finding, is there stuff that's sitting that you can maybe have an opportunity to make an offer on, not in a multiple offer, not 10, 20% over asking like there is for so many of the new listings that come on. So take a look at that. Make sure you're looking at the whole active market, not just the brand new ones that come on. That's the first trend that we're seeing in today's real estate market. The second thing that we're seeing in the market right now is this trend where sellers are continuing to follow the seasonality. We saw a week running into Memorial Day weekend where we usually see activity come down. And seller activity did. Listings went down from about 20, 30 active listings coming on the market every week down to 10, expected. But what we saw was 27 properties go under contract. That's actually up from our weekly average of like 15 or 20. So although sellers are still slow to pull the trigger and not list their properties, buyers, even with interest rates going up, which we're going to get to in a second, are still very, very aggressive, taking advantage of every opportunity. They're out there making offers. We just had one go with a 20-way bidding war this morning, and buyers aren't slowing down. So although there's seasonality on the sell side, there's not seasonality on the buyer side, which is going to play into some of the decisions that you want to make if you're a buyer or seller in this market today. Now, the next thing we want to look at in the market today is the rental market. The rental market's changing a little bit more than the sales market, and it's just slowing down. It's not falling off a cliff. There's not major price reductions, but things are sitting a little bit. We see maybe a weekend that goes by and maybe the app doesn't come in for maybe 5, 6 days. We're not seeing 5 apps in the first weekend like we were pretty much for the last 8 or 9 months. So prices are kind of stable, but the pace at which the market's moving is slowing down a little bit. We'll keep our eye on this. I don't know if we're going to see this dramatically change. I feel like we're kind of setting in to a new pricing structure and a new stable market, but we'll keep an eye on it. But it is the one that is changing a little bit, so we'll have a little bit of advice for renters and landlords coming up in just a second. Last but not least, we really want to take a look at what interest rates are doing today. Now, unfortunately, interest rates in the last 30 days have climbed pretty significantly, a half a point to almost 3/4 of a point. And really what's getting whacked is some of those higher price points, some of those jumbo loans that were stable, that were doing really well, are actually moving up as well. There's a lot of reasons for this. Inflation's still a problem, but the biggest thing is the debt ceiling right now. So we're approaching this artificially created debt ceiling where we're worried about U.S. bonds and U.S. treasuries, interest rates going up because of that. All smart minds out there are saying that this is going to be resolved. It's just a posturing political thing, but right now it's affecting interest rates. So something you want to make sure you're aware of. You don't want, if you have an old pre-approval from, let's say, about 3, 4, even 2 months ago, you want to update those numbers because things are changing rapidly. We're seeing people have offers accepted and then going back to their lender to get the app started, realizing how much higher their interest rate's going to be, and actually backing out right now. So interest rates are on the move. Be aware of them. Make sure you have a plan around them, which we'll talk about in just a second. All right, so now we're going to talk a little bit about some practical advice if you are a buyer, a seller, a renter, or a landlord in this market. Now, each one is very different, and the market dynamics will mean different things for each one of those segments. So let's start with buyers. Buyers, I'm going to say something weird here, something that you're not going to hear from a lot of realtors or brokerages out there. If you're not really desperate to move in the next few months, maybe wait. Maybe wait. Let's see if some more inventory comes on the market. Let's see what happens with interest rates. But more than that, let's wait for maybe that moment of pause. Maybe it's a summertime pause, maybe it's a back to school pause, maybe there's some bad news headlines that come out and buyers get a little freaked out. That might be your time to step in and buy a property without so many offers. Maybe the rates go up and that makes buyers pause, but you can refinance that in a year and get a better price on it in the coming months. If you need to buy something now, look at some older inventory, get aggressive with your offers. That's kind of what you have to do to compete right now. But if you have the luxury to wait a little bit, it might not be the worst idea. Prices could keep going up, but you also might have an ability. If you could buy, prices go up 2%, but you buy 5% under because there's not multiple offers, you're better off than buying 10% over now. So just think about that one there. All right, now sellers. If you're going to sell in the next 12 to 24 months, I can make a very strong argument for this next upcoming quarter or so being the best time to do. Now, we looked at already, the supply and demand is greatly in your favor. There's a ton of buyers out there. Interest rates are up and they don't really seem to care. The demand is still super strong. And there's not a lot of sellers hitting the market. They don't want to lose their interest rates. They don't want to lose their investment, whatever the case may be. So if you're looking to sell in the next few years, today might be the day. We have an election cycle coming up. We have interest rates that are unpredictable. We have a recession that we're already in or potentially about to be in, depending on how you want to define it. There's a lot of reasons that things could go flat or maybe even soften a little bit. And yeah, there might be some reasons that things continue to go up, and that likely could happen. But right now, the risk reward of selling today or continuing to hold on to it and sell maybe a year and a half, I don't like the odds. If I had a property, which I do, right? I have a rental property. We just talked to our financial advisor, and I said, hey, this is what we have. This is what we're getting. This is what we owe on it. This is what equity we have in it. Can I sell this now, or should I keep this for another 5 years? Because I'm not doing the in-between. And he said, well, based on the projections, I think you're better off keeping it. I said, cool, keep renting it. Let's lock up a long-term tenant because I'm not selling in 2 years. I'm selling now or in 5. So that's if we're non-owner occupied, it's an investment decision. Talk to your financial advisor, give us a call. We're happy to talk you through it. If you're living there, maybe you sell and you go rent for a year in the new market you're looking to go to. Now, it's a slippery slope. You don't want to get caught in that trap where now all of a sudden 5, 6, 10 years pass by and you didn't reinvest those funds. But it could be a way to capitalize on a very strong seller's market right now. Go try out the new town that you're looking to move to. Get that little extra space now rather than having to get outbid, and have the best of both worlds. So that's an option to consider. Give us a call. We'll talk you through those options because they're complex. They're very specific to your situation, but there's definitely something to consider there if you're selling in the next year or two, and there's some strategy to put in place. Last but not least, all of our renter clients out there. Now look, renting is expensive. The rental market is still very strong. It's very hot, very expensive. But if you need the flexibility, if you don't know where you're going to go for the next 2 or 3 years, it's expensive to buy and sell a house. Closing costs, all those things add in. So if you're going to be in a place less than 5 years, renting's not a bad option, but something to consider if you are looking to move in the next year or two and you don't really know when that's going to happen, you're kind of fluid in your situation. Some of the large rental buildings are great for certain reasons, but they give you a little bit of a hard time breaking your lease and all the fees that come with it. Look to rent potentially from an owner in a condo building. They are way more understanding. If the market is still strong where they can get the same rent that you're paying them, they'll let you out mid-lease, and we can help negotiate those things too. We do it all the time. We help our clients get in and out. We help the landlords re-rent it. We help the buyers negotiate and figure out that plan. So think about that, consider that, but definitely don't shy away from renting if you need the flexibility. So that's your Hoboken Real Estate Market update. It's halfway through the year. We're halfway through the spring market. There's a lot changing, a lot going on. So feel free to reach out if you have any questions. We're always here to help you. We'll see you on the next one.